Here's a weekly standard chart, MMTs on the VIX and whatnot, and what we're looking at here is we're going to get this right over here, and we're going to take a look at this big weekly breakout. Now, this is a fear indicator, and it lets you know that the bull is very fearful, and that the headlines out of Tokyo, nuclear plants, and hey, lots of things have contributed to it. But I can tell you one thing, that you've got a complete turnaround. We were very complacent and very oversold. So go look at those NASDAQ on the stockmarketfunding.com site. We had the NASDAQ, the Dow, and all of this up here. We said there was going to be a major correction. Didn't matter if it had to be a headline event, but there was going to be one that would happen. And we called that top on February 18th and 19th, and it's on the homepage of stockmarketfunding.com. Let's not be in denial. So basically, we shot straight right back up here. The last time we've had, this is what we would be looking for, because if this fear factor is going to keep running, then we're going to keep breaking higher. If we close below the green line, that's a 200-week moving average right there. If we get back below it and it's resistance, then that means at the lower end of the sell-off in the current week of Triple Witch, that would be a good sign for the bull, that is, if you got back below there. If we get up above that 200-week and build a base, we go a lot higher. These indexes go a hell of a lot lower than what they are right now. I guarantee it, because once that fear gets started, fear here lasted 4 weeks back in April of 2010. The other times we've had a couple of weeks of fear where they went up and they sold off. And if it doesn't look like this with the wick coming back down, that means that Tokyo fear, Japanese fear, and fund managers and all their fear is in the market, and there's a lot of panic selling going on when that indicator goes up on a weekly. And this is called the VIX, the CBO Volatility Index. And let me just share something with you, because the higher the base, the higher it consolidates. That means that equities remain very vulnerable to more panic selling. You're going to have a situation like this, where you have a 2-week breakout, but then they come right back down. Or you get a red bar, weekly bar, that starts next to it and starts to come down. Equities will bounce and people's fear will be coming off the table.